What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 25th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I not only want to spend some time to talk about the worst week we've had for the Bitcoin ETF since its inception, with a week of net outflows over the past week. But beyond that as well, I not only want to talk about what this may mean for markets, but also what it could mean for altcoins and the potential altcoin cycle that we've been looking out for in price action. We've got a lot to unpack here in today's video, so if you guys happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here by talking a little bit about price action. Since back here, a little over a week ago, back on March 14th, we have seen a continued decline in price action with generally lower highs and lower lows. However, we have started to see a bit of change of structure here. Since back here on March 20th and here on March 22nd, we've seen a nice increase of higher lows here, but generally speaking, still setting in slightly lower highs. So we're not seeing a huge comeback, a huge resurgence in buy-side pressure, and a lot of the time over the past couple of weeks, the indicators that served as support since all the way back here, once we broke them back in January after the ETF post-launch correction, what was originally serving as support has been generally serving as resistance. Now, so far, as of the last 24 hours, we've been able to have a nice green candle break up here above those moving averages. The question is, can we actually make it support? We already had this happen back here on March 20th, and we've had many attempts where we went slightly above the moving averages, but weren't able to get a 4-hour close or a daily close. So I'm interested to see how this will play out here within price. But I want to explain why this is happening here and what we need to keep an eye on in order to determine whether or not price may be moving lower. Now, at the end of the day, price is going to be your ultimate gauge. If it can't hold on these moving averages, then that's your worrying sign. If it does find support here, then it's got a potential chance to come and clear up against this $68,000 level, which has served as stubborn as resistance over the past couple of days. And so this is, again, what to watch for in regards to price, watching for a clear level of support against those moving averages. Clearing through 68K could be very much your gauge, I think. I know as well Russ on the channel has talked as well about a similar level there around 70K. Generally speaking, right now, there's a lot of chop, and it's best not to trade too much during the chop. You want to wait until you get the clear breakout to the upside, or wait for greener pastures where you can get better discounts. Now, I want to go ahead and talk again about why this is happening, right? At the end of the day, the big reason for this is a huge change in the inflows or outflows of the Bitcoin ETF. The ETF has been the driving vehicle, the narrative, the topic of excitement for bulls and bears as well when trying to determine where market price is going. And it's important to understand that there is a huge amount of outflows this past week, mainly due to Genesis offloading a lot of its GBTC, or the Grayscale Bitcoin Trust product, as they've now had the ability to start offloading that during the bankruptcy process. Now, I want to emphasize here again that while this is temporary, as a lot of people have emphasized, it is important to note here, guys, that at the end of the day, I think we're starting to see something much more concerning than just the outflows of GBTC that we need to keep in mind when it comes to the ETF narrative. Now, at the end of the day, guys, again, I want to make it very clear, I'm not here to be bearish. If Bitcoin can start treating these moving averages on the 4-hour time frame as support yet again, like it had done all the way back here from January to March of 2024, and we can start to clear through these multi-day levels of resistance like 68K. I know that Russ is also looking at around the $69,000, $70,000 range as well. Then in this case, I'm going to continue to trade long into the upside. I'm going to be placing my altcoin bets. I'm going to be betting on higher prices and continue following the trend. However, right now the trend is stalling. We see it clearly in the price action, and I think there's a fundamental reason why that is starting to play out. And it has to do with the ETF inflows and outflows. Let's take a deeper look beyond the narrative that so many people are screaming out there, that this is just short-term selling from Genesis. Yes, it is true that in this case, GBTC outflows were at a really heightened level. In fact, this was one of the highest weeks of outflows for the GBTC product since back here on week 3 in late January. But that's not the entire story. In fact, what screams out much more to me, and I think left us with one of the worst net weeks overall since the ETF launched, the worst week overall for outflows and inflows, was essentially the lack of inflows from the other ETF products, predominantly the IBIT or BlackRock iShares Bitcoin ETF. Take a look back here. This was the third worst week we've had, comparative to week 7 with 10.5 thousand Bitcoin and week 1 with 2.6K Bitcoin. Essentially speaking, we can see very clearly here that the multi-week trend of 30,000 plus Bitcoin being bought up by the BlackRock iShares Bitcoin ETF is not continuing. Right? And this is something I want to bring to your attention, guys. And we see this in a lot of other ETFs. Fidelity had an abysmal week on inflows. Just look at the numbers. You used to have weeks here where you had 24,000, 16,000, 12,000, 19,000 BTC, 1.2 thousand. And we just go down the list here. There are some that are holding up better than others, right? There are some that are seeing outflows like the Invesco Galaxy Bitcoin ETF. Multiple weeks here of outflows. So I don't want to focus on the nitty-gritty details. I don't want to point fingers at which ETFs are doing better and which ones are. It really doesn't matter. At the end of the day, we're seeing net overall these new ETF inflows into the new ETF products are not keeping up. It was a really bad week. 17,000 Bitcoin. In fact, this was the weakest week overall. If you don't want to take my word for it, it was the weakest week overall for inflows to every other ETF excluding GBTC, right? So if you just wanted to focus on the new players on the street, it was the weakest week by far. So what does this tell us here? I think it tells us something very important, which is that there is a false narrative being preached around out there, right? Well, I'm all about following price, guys, and I'm not just trying to scream into the roof here and say, oh, we had one bad week, therefore the market's done, the ETF trend is over. I'm not here to say that. What I am here to say, though, is that if these inflows don't pick up, then market price will likely start to stall. Because as you move higher and higher here, you are going to demand more liquidity and more inflows. And it is important to understand that this narrative that there is an infinite money glitch with institutional capital coming in via the Bitcoin ETF is just outright wrong. Because at the end of the day, essentially, as you move higher in price, there are going to be more people who want to sell. And we can see very clearly here that even during the period of time when we had inflows increasing on a weekly basis, right? We can see here, for example, in week 10, on the week here where we had a net increase overall for the ETFs around 35,000 Bitcoin, we still saw in that week a collapse in price, a pretty significant correction. As market prices move higher, institutions are not only going to be more wary to be buying in, they're not as FOMO driven as retail investors, but beyond that as well, it is imperative to understand that as market prices move higher, and this is true on on-chain metrics, we've seen it in previous cycles, more Bitcoin that was held for longer periods of time, for a year plus, starts to dwindle, meaning that people are moving their Bitcoin on-chain, likely onto the order books, likely to sell, causing additional sell-side pressure. So again, I'm just trying to bring this to your guys' attention because if we don't see Bitcoin starting to see more massive inflows on this dip and this correction, and I think we're seeing clear signs here that maybe there's not that risk appetite, that maybe it got a bit overextended in the near term, then we could expect a nice correction in the near term. It doesn't have to be a start of a bear market. It doesn't mean that the trend can't continue higher. It could just mean, as we've talked about since back here over the last couple of weeks, that we're due for a healthy correction. And I think that you're probably going to have a chance or an opportunity, if we just kind of extend these lines here, to come down into a pocket of prior interest. Coming down here as we approach some of the key moving averages, like the 100-day moving average, some of the prior ranges of support back here on 50K. Maybe we don't get it that low. Maybe it's somewhere in this pocket between 56 to 53K. The case in point here I want to bring up is that you can always utilize the moving averages to your advantage. If Bitcoin is continuing to get weighed down by these moving averages, let it continue dwindling down until it actually establishes a breakout above that point. You don't want to try to pick absolute bottoms on Bitcoin or any asset. Trying to catch a falling knife is usually not going to play in your favor. The best thing you can do is trade when the trend is there. And know during those pockets of time when you can get into altcoin positions and make great money. Right? And again, I understand a lot of people say, but MicroStrategy and Michael Saylor are continuing to buy Bitcoin. The ETF inflows will likely come back big. And also there's, particular wallet addresses like Mr. 100 that are buying 100 Bitcoin every day. We don't know who it is, but they're just continuously buying Bitcoin. I get all that, guys. But at the same time, while we can point to these inflows, if you don't look at the overall net picture and see that for the last couple of weeks, we're starting to see signs that inflows are slowing and outflows are picking up, you might get sidetracked. So it's very important to keep that in mind here. And look, I love the conviction. I love Bitcoin here at the end of the day, guys. It's cool to see this continued traction around Bitcoin, but it is important to note that. Now, one thing I wanted to let you guys know about here as well, they're one of our partners here in this channel. If you guys are doing active trading in the market, if you've realized any gains this past year in 2023, it is coming up on tax season, at least in the United States, and I know in many other jurisdictions across the world. So if you guys haven't already, definitely check out our tax partner here in the channel, CoinLedger. They are one of the best tools in the market when it comes to actually plugging in all of your exchange data as well as your crypto wallets to get a full 360-degree view, so you can understand in a simple fashion all of your tax liabilities for the year and also generate your tax documentation with just a few clicks. Not to mention as well, they have integrations with TurboTax and TaxAct on a lot of the major tax platforms out there, so it plugs straight in to the tax platforms you're likely already using. And the great thing about this is that they have integrations with all the major wallets and exchanges, as well as great support throughout the clock. So if you guys are interested and you want to get 10% off on CoinLedger, I definitely recommend you guys check out the link down below in the description. Do not wait around for tax season. I know none of us like to do taxes. It's never fun. It always seems overwhelming, but one of the best things you can do is get ahead on it and utilize a tool that's going to help you get there. And you guys will get 10% off if you guys use the link down below in the description on any of the pricing plans. It's really affordable for a lot of people. And if you're even someone who's trading very actively in the market, it only will go as high as $99 to $200 for your tax season. So if you guys are interested, check out the link down below in the description. I wanted to let you guys know on a quick side note before we dive into the altcoin market, we made a pretty big announcement the other day that we have a new content creator on the channel. We're trialing a new content creator known as Russ. I've known Russ over the past couple of months. He's one of my favorite individuals I know when it comes to macro trading, and we think a lot alike in regards to how to approach markets, but we also have our niche viewpoints. We don't always agree on everything, and I think that that's awesome. And we wanted to get other content creators on the channel for some time, and Russ put out his first upload the other day. So not only check out the announcement video where we had a really great interview, but also if you have some time, check out Russ's first upload. He's going to be uploading every Friday, just to let you guys know in case you missed those previous videos, so you know the content schedule. And he may start creating more and more content as time progresses, but overall he'll be doing those uploads on Friday. He did a really cool piece on not only covering a little bit on crypto markets, but he also talked about the cannabis sector, AI plays within the Magnificent Seven, really doing more of an equities and kind of macro thesis update on the market. So definitely recommend you guys check that out and give him a chance. I think he's got some really good insights that also vary from the stuff that we put out here on the content that I've put out over the past couple of weeks and months, covering some different corners that we haven't really gotten to give attention to. So anyways, check those out if you guys want. But the main thing I want to dive into is the last core topic that I think you guys are probably itching to know about right now. With a pretty weak turnout on the ETFs here this past week, I know a lot of people are wondering, is the altcoin cycle canceled? Can we not see altcoin dominance surge up? And I would say that as of now, I'm not seeing any signs that that can't play out. At the end of the day, guys, we've seen in previous starts of, not only just like mid-cycle corrections, but also as well during the start of bear markets for Bitcoin, where Bitcoin is setting its all-time high. That can actually be when Bitcoin is at its peak valuation. You start to see a lot of capital outflows into the altcoin space. A lot of that capital recycles and starts to essentially double down on a lot of the more speculative plays that are fitting into the others market cap here. This is all the other plays outside of the top 10. And the main point I want to make here is that overall dominance here, while Bitcoin has been pulling back, others dominance is just ticking up here. It's right back where it was in December 2023. We are seeing any time that this dominance metric is dipping during the week, it's coming right back up. So people are buying the dip on altcoins versus their BTC pairs. And it's giving them an ability to garner more and more dominance in the market. So overall here, again, as we take a look throughout history, we've got that trajectory to make much larger moves here in altcoins. As we've talked about, if this continues to hold strength here, then our bet is on altcoins, especially on the strong narratives that we've talked about here, such as Bitcoin infrastructure, DePIN, meme coins. We can't argue whether or not we like these narratives or not. These are the ones that are really tracking strong in the market. They are holding strong in their BTC pairings, and many of them have still technical setups that could really allow them to go through this kind of parabolic phase and really continue charging higher. Now, again, some of those plays on the more kind of fundamental level are plays like Render. Luckily, a lot of these plays are starting to cool down here over the past couple of days. They've been ones that have been generally leading. I'm going to be, again, as we've emphasized, watching for render to come down into this pocket. If we take a look in the weekly time frame, we had a nice near engulfing candle here on the weekly time frame, which will likely mean that as we're starting to use those moving averages as resistance, we can get a good buy the dip opportunity on plays like render, and a previous range of resistance now potentially serving as support, clearing the way for higher price moves going into the months ahead. Again, keep in mind though, doesn't guarantee that that's going to serve as support, but we're going to watch to see how price reacts in that range. But beyond that as well, we've also got stacks. And while stacks has cooled down here a little bit over the last 24, 48 hours and is still kind of facing resistance at this range here, we are really loving the resilient bounce here we got. It bounced off the range we talked about on YouTube the other day, watching it clear through those moving averages and make support on prior resistance on the long-term descending line of resistance or the top of the long-term wedge. So I'm going to be looking for it again to make a base of support around this range at 4,800. And if that really holds out here for a couple days, then this thing could really start to churn higher in the broader altcoin move. So these are really, again, two of the strong fundamental plays that I'm watching. Another one as well, I wanted to give two other alternatives that you guys can keep an eye on. I know some people have asked about an update on ordinals. We talked about Ordi in this case back here in November during this pullback here, and that was again where the next leg up really started to play out. It was a really solid return for a lot of those who took the trade, but we've been saying for a while, since back here in December and January, to stay away from Ordi, wait for lower prices, and price has just been signaling that to us. We can't get above the moving averages. It keeps generally weighing us down. Every kind of pop up in price here gets faded, and we're still seeing it here. So I think that we're starting to get into the entry pocket where it might make interest, an interesting position somewhere here in the ballpark of a 56 to 66% correction is where I would get interested in Ordi. This is again a custom ratio against Bitcoin where we have Ordi divided by BTC, but generally going down here into this range where prior resistance can become new support for this to continue back higher. And I don't know if it breaks past the previous all-time highs and goes higher or just makes a nice rally up here, but either way, if you're getting it here somewhere in this pocket, you've got an opportunity to make a nice 100% move, maybe a nice 150, 200% move, and maybe even higher if Ordi really starts to take off. But I'm going to be watching again for how it reacts when it goes in that price range, if it's maintaining above the moving averages, and if it's again one of the central topic points. And we'll see again also as well in other Bitcoin infrastructure plays like stacks, whether or not BTC related plays are the narrative. Outside of that as well, I wanted to talk about Super. This was one of the GameFi plays that we talked about, one of the more serious plays in the gaming sector of crypto. We've seen as of the last couple of days here, literally the last week, the level we were talking about in our prior video to potentially find an entry, right? This level here has broken. So essentially we didn't see it hold there. The 4-hour time frame, 50 EMA, is holding prices down. And while we get a nice move up here, essentially that line, which is an ascending line of support, is now starting to act as resistance. So generally speaking, I would love to find this at a nice entry down here in this ballpark between this range of resistance at 1,700 down here towards 1,300 as potential support. This could be a range of accumulation for this to be able to continue extend higher. I think that overall this is not only a strong fundamental play, but it's got the exchange listings, so it's got the liquidity, and outside of that as well, these plays, when you can get them on nice 40, 50% pullbacks, these kind of market leaders will likely continue churning higher. So I'm going to definitely keeping an eye on this one here as well. But overall, guys, the key thing is this. We're going to be watching others' dominance. We're going to be watching to see if those ETF inflows come back. I think at the end of the day, when it comes to the topic of an altcoin cycle, it doesn't really matter whether or not those ETF inflows are going to continue charging higher, because we've seen at the end of the day, it's when dominance starts to kick in that those pairings start to really accelerate and we can start to find some really great moves. And so long as their USD pairs are not getting dragged down and they are starting to really move higher, that combination of USD appreciation, essentially seeing that people are paying a higher premium, and also that overall dominance is rising, and it's time to start allocating ourselves there so we can start to outpace Bitcoin and ideally increase our portfolio and our Bitcoin comparative. But above all, guys, those are some plays to keep on your radar. Those are some important points to talk about and keep in mind when you're watching Bitcoin's price action. And above all, if you guys are looking to not only maximize your returns, but really maximize how much you take away from investing and trading in crypto. It doesn't matter if you're short-term or long-term. I think it's imperative that you guys think not only about your trading strategy, but also your tax strategy. That's why our sponsor, I Trust Capital, one of our long-term partners in the channel, will help you guys get set up with a cryptocurrency IRA. Not only do we have partners in this channel that can help you to simplify your tax season, but another way is to simplify limiting your tax obligations. So essentially, within an IRA or individual retirement account, you can trade funds that are deposited in the account essentially tax-free on an annual basis. And the great thing about that is that you can allow yourself to build up your portfolio, trade more actively or passively invest long-term into retirement, and only have to pay taxes at a much lower rate when you go into retirement. It does depend on the IRA structure that you choose. There's a couple different paths here. And the great thing about I Trust Capital is they cover a whole range of major cryptocurrencies as well as altcoins and precious metals like silver and gold. So if you guys are interested, check out the link down below in the description. You'll get $100 if you sign up with our link down below. But it's a great way to not only support the channel, but also start preparing for retirement and limit your tax obligations on the cryptocurrency that you trade. So that's it for today's video, guys. I hope this video provides some food for thought to what to watch for the next couple of days. We're going to be continuing to watch that 68, 70K range of potential resistance. If it's cleared through, we've got the grounds to potentially continue charging higher. But most importantly, we're going to be watching those moving averages on the hourly or 4-hour time frame to see whether or not we can really start setting higher lows and higher highs, indicative of a longer-term trend acceleration. Thanks so much, guys, for tuning in as always. I hope you guys enjoyed this video. If you did, consider dropping a like, and I'll see you guys on Wednesday. Take care, everyone.